This company, I believe, has one of the biggest moats out there. We're going to evaluate the company. We're going to go through some news, some high-level metrics, some analyst estimates. Of course, we're going to cover bull and bear cases from our very own community. Our community members get involved, and they give the bull and bear cases for this company. We're going to go over the 8 pillars, of course, and then we're going to finish it off with the most important question, how much to pay for this stock. So, what's the stock? Google. You are on YouTube right now watching us. The top 2 search engines in the world are google.com and youtube.com. It's an incredible, incredible business. Sure is. And remember, news follows the stock price. So what's Google doing today? It's back up to $133 when it was in the mid 80s and high 80s, which it was just
November.
Right when the day before Meta's all-time low of 88 bucks, people were saying Google's lost its way. It's getting rid of employees. They have to, their search engine is TikTok. I'm like, okay, sounds good. But just remember, every investment is the present value of all future cash flow. And what we're trying to do on this channel is teach a process for how to invest, whether you're a beginner investor or an advanced investor. We're going to cover everything in this video that we can along the spectrum. The further and further in this video you go, the more information you'll be getting. So let's go break it down. Google has a $1.7 trillion market cap. If you want to buy every share in the market, that's how much you got to pay. But here's what's interesting. Their enterprise value is also 1.7.
Wow.
That means they essentially have 0 debt.
Wow.
If you take the cash, pay off the debt, etc. We love that. Just like you personally, debt works the same for a person as it does for a company. The more debt they have, the harder it is to stay in business. When bad times occur, you want less debt. That's what we love about Google. In the last 5 years, they've averaged $52.5 billion in profit. Last year was $61 billion. Their current PE is 28. Their 5-year PE is 32. So at 83 bucks, their PE was like 18 or 19. Mm-hmm. Wow. No dividend, of course.
Yeah.
High gross profit, 55%, means every extra dollar they bring in revenue generates about 55 cents in earnings before taxes. That's an incredible number, Mo.
Yeah. Good ROIC.
Great ROIC, 15%.
Really
the market average is 9 to 10. This means they get a really good return on the money they invest in their business. And as you know, they do invest in other business lines. Like they have this thing, like their other bets they're called or something like that, where they're investing in other ideas to make more money.
These guys they're going to get into the AI space big time.
Are they?
Sure they are.
All right. Do you have some news on Google right here, Mo, that you can go over? That way our viewers can get some ideas of what's going on.
All right. So the United States takes on Google in the biggest tech monopoly trial of the 21st century. Everybody's going after Google for this.
Well, listen, now they're going after Amazon too, and they're going after
Meta.
They went
go after everybody.
Yeah, they went after Microsoft in the 90s. It was a big take, and claimed Google illegally orchestrated its business dealings so that's first search engine people see when they turn on their phones and web browsers. The government says Google's goal was to stomp out competition. Well, okay.
Yeah, that's the point of a business.
I mean,
thank you.
You know, back in the 90s with Microsoft, they had emails from Bill Gates to people saying, how much do I need to pay you to not use the competitors, not use Netscape?
Yeah.
All right.
Google's Pixel 8 Pro will forever change smartphones.
Okay.
What?
Maybe,
but let's see. Nick, do you know anything about this? Is it a really good camera? Is that what we have here? That's what Google always has. We have a really good camera. Now, I will say they do have a really good camera.
They do.
But
their battery lasts a long time. It's like, all right, sounds good. Everybody in the world's on Apple except for Nick and Rahman.
Frankly, I think that battery is important because I go around everywhere and I don't have outlets anywhere.
There's no outlets. There's no cords.
I can't even charge my phone in my car. It's so weird.
By the way, that's sarcasm. For those of you who are not aware of this, we're being funny. All right, cool.
Those are a couple things.
So let's check out some 8 pillars in the company. We love this. And remember, guys, if you have our software, our community, you can customize your pillars up to 12 different pillars. But look at this, Mo. It's just the 2 valuation metrics, the 2 X's.
Yeah.
Guys, everything else we love in the company, they're just maybe a little expensive. They could be cheap still.
Could be, yeah.
You know, Bill Ackman came out and said he's got a big position. His number 1 position now is Google.
So I saw that, and I was like, where were you when it was in the 80s and 90s?
No, he started buying.
Oh, he did.
He did. He said that he, what did he say? We can look it up, but maybe he was trying to say hey, but
Because I just saw the article like 2 days ago.
Yeah,
so.
but he said he's been building the position for a while. Now, I don't know if he got in the 80s or 90s, but I think he's at sub 100 or something like that.
That makes sense. Something I really like about what Google's doing, we have shares outstanding. They're buying back shares, but if you actually look at it from 2014, diluted, and then they started buying back in 2019. I don't know if that's, I don't remember what the price was, but it just shows it's not one of those companies that just buys back consistently over a 20-year period. You know, with those companies, Home Depot, Lowe's,
yeah, and our big thing is, guys, and this is a very unique view, I guess. We're value investors. When a company's buying back their shares, it's really important that they're buying back cheap shares. Cheap doesn't mean a low PE. Cheap just means, okay, can we allocate this capital best by buying back shares that we believe are underpriced? Now, of course, everybody's going to say their stocks are underpriced. Enron said it right before their big collapse. But it's important to understand the capital allocation process of companies. You know, you look at a company like Apple, and Tim Cook's meeting with Warren Buffett a lot and getting a lot of advice from Warren Buffett on how to properly allocate capital. Even Tim Cook has said, I've learned a lot about capital allocation, because really that's what's important. It's important that a company takes their cash, the cash that you own part of, and allocates it the right way. That's really, really important. So, somebody sent me a message. I'll check that later. All right, let's go check out some analyst estimates before we go over some bull and bear cases. The company's expected to make $581 per share this year, going to $968 in the next 4 years.
Okay.
Wow. That's big jumps. That's double-digit growth every year. And revenue, $313 a year to $441 according to analysts. Now remember, they're analysts, but that is good growth.
Pretty good.
All right, so let's go into our community, Mo, into our community chat, and let's go check out the Google and a lot of interaction. So I'm going to do one of the last ones here by D-Money. Leader in search engines. They own Google and YouTube, which are the two largest search engines in the world. Yep. Strong ROIC, minimal long-term debt. Now, the risk he's putting there is the Department of Justice lawsuits. Got it. Yeah. Understood completely. I don't want to dismiss it because it's not something to be dismissed. But at the same point, these things tend to, for a company like Google, these things I think will tend to work out okay for them. Mo, what else are you finding?
So here's XILP value. Strong moat in online.
Oh, he's a very active user, by the way.
Oh,
do you see his avatar?
What is that?
It's at Martin's, what's the guy's name? The guy.
Scarelli?
Yeah, whatever his name is. The guy who was, that's funny. I thought that was funny.
Leading advertising company. The bull case, digital advertising market will grow, especially with its strong positions in search ads.
I mean, look at the world. As the world grows, more and more people will be doing things online. And when they do things online, they're going to be looking at ads.
Continued cloud revenue growth, currently 24% year over year.
Wow.
Success in their new AI that they revealed in early 2023.
Okay.
Now for some bears, network revenue down. Competition, not really. I mean,
do you think the online, it's highly competitive.
I don't know about this, and frankly, the competition, you're always going to have competition, but I'm not really worried about that. That's not a big thing that would play into my thesis.
So it would play into my thesis if I thought, I look at Google saying, okay, are people going to stop using like Gmail? It's some absurd number of our users are Gmail users, an absurd number. Like I think I'm the only person in the world that doesn't use Gmail.
So it's funny. When we were in Ireland, we were going down this one street, and every business was like, whatever their business is at gmail.com. It's like they don't even
do their own domains.
They don't even get an own domain. They just go Gmail.
Either way,
yeah.
YouTube. You know, the more and more we learn about YouTube from having a YouTube channel, the more and more I see how dedicated. You guys, here's an example of how dedicated Google is to the user experience. And I've said this in many videos. The way it works is the first 3 lines of Google searches gets 85% of the clicks. Guess who owns those first 3 lines? They all say this word on there, ad. It's Google. Now, you sit there and go, line 1, line 2, line 3. Who pays the most, Mo?
Not necessarily line 1, right?
That's exactly it. You would think number 1 pays the most, but Google's so big on the user experience that if your website, through their search engines and all the way they look at your website, is highly directed to what the user is looking for, you could pay a lot less than these two. That's how important it is for the user experience to be good. They want to charge you less for having a highly relevant search to your customers. They're willing to sacrifice revenue so that your customer has a good experience. It is customer first experience, right? The more and more I learn about YouTube, they're all about recommending videos based on your history that'll get you to watch more videos. They want you to have a great experience there. They're going to reward us for the longer and longer that you watch a video. That's how important it is for them. That's incredible for me. Yeah. So that's why I look at the YouTube. That's why I look at the revenue and say, there is competition. There's Facebook. Don't get me wrong. People spend their time on other platforms, but when you're Google searching, when you're searching, I just say, when you're Google searching, I really meant when you're looking on the internet. And I use the verb to Google search, right?
It's just become
yes.
It's amazing.
YouTube it. Google it, YouTube it.
Yeah.
That's what I always tell my every 2 seconds to my fiance. Google it, YouTube it, Google it, YouTube
Have you
it.
used Google Lens?
No.
Google Lens is really cool. You can take a picture of
I have.
cup. Yeah, it's awesome.
So what
I
he's
use it
saying
all the
is you
time.
take a picture of this and it'll find it for you on the internet. Yeah.
Yeah, it's amazing.
Yeah, it is amazing. All right, what else you got, Mo?
Dependency on ad revenue. Most of their revenue comes from advertising.
I don't think that's a bear case.
I don't think so. But he's basically saying if there's an economic downturn, they could suffer. Who knows?
By the way, that's 100% true. Advertising revenue will decrease in economic downturn, but we're trying to teach people to buy for the next 5, 10, 15, 20 years. Don't worry about an upcoming recession. If you're able to buy at a good price, you're not going to be able to predict when the recessions occur. So just don't worry about that. Buy good companies at good prices.
Yep.
Anything else?
No. The rest of it really just gets into these lawsuits.
Yeah, the Department of Justice stuff is a concern there.
The AI integration is going to be very fun to watch over the next couple of years. I am quite excited for that one.
Yeah. All right. So the next question to ask is, what's the right price to pay for Google? Now, guys, we talk about the community a lot. We talk about the software a lot. And what I'm not asking you to make a decision right now, yes or no. What I'm asking you to do is to make an informed decision. And you cannot possibly make an informed decision from the outside. You have to make an informed decision from the inside by using the software, which was a recommendation from one of our best users. He said, Paul, get people in the software, they'll see the value. So that's what I did. Just like you want to buy a car, you don't just buy a car without taking it for a test drive. You take it for a 15-minute test drive. But in this situation, we're offering a 7-day full access test drive. All you have to do is go to everythingmoney.com and sign up. That's simple. Take it for 7 days. I'm so confident that along the way, you will see the value that you'll sign up. And that's when you can make that informed decision. So again, go to everythingmoney.com, go sign up, become part of that informed decision that we're asking you to make. So when was the last time I did a Google? Oh boy, this is what I did the other day. The last time I did 10-year analysis on Google was September 12th. Let's see if these assumptions are still accurate. Mo, I think I was a little conservative here.
Yeah, it looks like it.
I did 4. So for revenue growth, guys, on a 10-year assumption, I did 4, 6.5, and 9. What'd you do?
I did 6, 9, and 12.
I'm actually going to change this around a little bit. Let's see. I'm going to do 5, 8, and 11.
Okay.
Profit margin. I did 21, 23, and 25.
I did 20, 23, and 26.
Okay. For free cash flow, I did the exact same thing. 21, 23, and 25%.
Yep, same here. 20, 23, 26.
Now, what was your PE and price of free cash flow at the end of 10 years?
So I did 17, 20, and 23.
That's what I did as well.
Oh, okay.
And for desired return, I have 10 in here, but obviously I put no margin of safety. Remember, guys, the higher your assumptions, the higher the desired return should be. That increases your margin of safety. But I made low assumptions here, so I don't have to get as big a margin of safety, right? So I'm looking at, I might do 10, 11.5, and 13%. What'd you do, Mo?
I did 10, 12, and 14. I had that previously. 10, 11.5, 13.
So on 12, the thing is about 12 is...
12 is a stretch.
It's like, do I really need to make 12%? But again, 11.5 isn't much different either for Google. So guys, this is the art of investing. We're sitting here discussing what's the right return. By the way, your returns might be even lower. You might sit there and say, Paul, I'm okay making 8% on the low side, 10 in the middle, and 12% on the high side. That's the point of investing. It's a very subjective matter and depends on what else you're doing. So I hit the analyze button. Now, guys, before we go through that, just stick with me for 1 minute longer because I want to explain these numbers. It's important to me to teach you how to fish and not just hand you fish. So when you see these numbers, stick with me for just 1 more minute. I hit the analyze button. All right, low price of 80, high price of 145, and middle price of 110. Mo, what'd you get?
Okay, so I got 81 on the low end, 151 on the high end, and about 112 in the middle.
All right, so we're pretty close to our numbers here.
Yeah.
Guys, if you buy Google today at today's price of 134 and the lowest assumptions occur, based on mine, I'm gonna make about 3% return, including dividends. Middle assumptions occur, 8.7, high assumptions occur, 14. So I have a decision to make. Do I wanna buy it today or not? I have it on my watch list at 105. Actually, I'm probably gonna increase it to 110 here now.
I'm 115. And I actually might go to 120, and the
Actually,
reason is to sell
115.
puts.
Yeah, that's what I'm gonna do. That's why I said 115, sell put. So guys, as time has gone on, my price keeps going up as fundamentals get better. All right, guys, and we have Wednesday, 2 p.m. Eastern time, October 4th. We have a web class on how you can beat the market. Click the link below if you want to try that out. It's absolutely free. Check it out this Wednesday, 2 p.m. Eastern time. Take care.